Argie Taylor, hello and welcome to BITV.
Hi, Jean-Baptiste. Thank you for having me.
It's a pleasure to have you. You are the head of International Investment Group for BNP Paribas Real Estate. Your company recently published its European Office Market Review for the first quarter of 2024. First question for any kind of question during those kind of research papers. How did the office market behave in the major European cities that are in your scope since the beginning of the year?
Jean-Baptiste, thank you for the question. It's the million-dollar question. The office sector is definitely the sector that's probably had the most kicking in the last year or two. How has the sector performed at the beginning of this year? Well, take-up is only marginally down to what we saw back in sort of 2014, 2015. It is not a complete desert out there. We are seeing clear trends, which we've all been expecting for some time, that the occupiers are upgrading their space. They're moving into more central locations across most of the gateway cities. And they're willing to pay a rent premium for the right opportunity. This year, we're beginning to see that in practice, which gives a lot of confidence to the investors. It gives a lot of confidence to the developers, etc. So may it continue for the rest of the year and into 25.
Okay, so you said that European occupiers tend to ask for like prime assets, like low carbon or low energy consuming and high quality services for offices. What is the market answer and what impact can it have on the investment sector?
Look, with the occupiers, there's obviously the green revolution has captured the world's attention. We've got the Paris Agreement. A lot of all the countries and governments around the world have signed up to net zero carbon targets by 2050. Obviously, the occupiers are also making promises, whether they're listed or whether they have investors, etc. They also have employees, and they want to do the right thing in the eyes of their employees as well. So as a result, they are all targeting suitable accommodation. Obviously, cost comes into it. Obviously, they will not just blindly sign up to the most expensive and take unnecessary space. So there's an optimization about how much space they are taking, but they are really wanting to do the right thing. If they do the right thing, they can recruit. If they do the right thing, their shareholders are happy. If they do the right thing, their investors are happy, etc. So it is everyone's on a similar path. But what we're also seeing is we're not seeing people take unnecessary office accommodation. So we're much more rational over how much space we need. The 5-day office week is a thing of the past. Now, I always questioned actually how much the 5-day office week was really the case 20 years ago. I started my career 20 years ago. I have to say there were definitely times where a lot of the people in the office weren't there on a Thursday afternoon and a Friday afternoon. Whereas now, I think people are much more honest. You know, the office is very busy Tuesday, Wednesday, Thursday. It is quite busy on a Monday. And actually, Friday is beginning to come back a bit. But people are being much more careful with their sort of commutes, etc.
Okay. And what is the impact from the investor point of view?
Look, the investors obviously want to buy best in class, but what are the trends that we're seeing at the moment? Obviously, we've heard about the private equity money beginning to mobilize. Obviously, the private equity money has been targeting the themes, but they are beginning to come back into the office space. And there's been a number of large office transactions in London, Paris, and Germany in the last 12 months. But what is the consistent pattern there? These are best, prime located assets, very strong covenants, a yield which compared to the average over the last sort of 6, 7, 8 years is actually very attractive today. It may look a little bit tight when you compare it to fixed income, but a lot of these investors are looking at the rent passing in the building. They're seeing the security of the tenant, but they're looking at the rent passing and going, hang on, that rent is genuinely 10, 15, 20% below market rent of a best-in-class building that's being delivered. So if I buy this building, I know there's only an upwards reversion element to the value in the future. So that seems to be the trend. So we're seeing these sort of core yields, these prime yields, for example, in Paris trending around 4 now, 4.5 to 4 over the last sort of 6 months. But a lot of those assets are under rented. If they were a brand new space, you would be getting a rent, 10, 15% higher. So, we almost should be looking at the equivalent yield basis. And with that equivalent yield, it might be 25, 50 bips higher than the yield that is reported.
Okay. It's interesting to talk about the yields because one of the recent decision from the ECB of lowering rates announcement was getting some kind of reaction from the investment sector. What is your opinion on that matter?
Look, we've been debating BNP. We have the unique piece at BNP Real Estate is we are wholly owned by the bank, which gives us, without doubt, unrivaled access to some phenomenal insight onto the economic trends, etc. We've been talking about the ECB lowering rates for some time. We've been talking about the Bank of England lowering rates. We've been talking about the Fed lowering rates. I think everyone has been waiting for that, for the first person to pull to fire the pistol to reduce the rates. Obviously, Canada went first. Now the ECB has followed. What's the reaction of the investors? I would say at the moment, muted. Why? Because it was already expected. It was priced in. It's already into the swap rates of your financing assumptions. Now, the question is, what's the direction of travel? What's going to happen with inflation? We're watching wage growth in the UK, for example. We're watching employment, etc. We've obviously got a year of political events across Europe, some arguably shifting a little bit further left, quite a lot shifting a little bit further right. What we need is a direction of travel and interest rates. Of course, 1 or 2 more drops in rates before the end of the year will provide the tailwinds with the clear data on rental growth and that clear trend to prime locations. It makes the whole investment rationale much easier to understand. And that's why I'm sort of confident the momentum is genuinely building and the investors are coming back into the office sector.
All right. Well, we'll keep that positive note for the end. Thank you, Argie Taylor, for your testimony, and we'll have the pleasure to receive you again on BITV.
Jean-Baptiste, it's a pleasure. Anytime. Thank you.